Well, 25,000 is actually just a milestone in what is otherwise a long journey for the Indian equity markets itself. So I just thought it's a good time to look back and track that journey itself. The index started in April 1, 1996 with a base of 1,000. Over the next 11 years, in September 2007, it moved to 5,000. Between 96 and 2007, we of course had the IT boom, the IT bust, the Asian financial crisis, the big bull run as well. And then from there, we had the great financial crisis of 2008. Between that and 2017, the Nifty doubled again to 10,000. Thereafter, in quick succession, it moved to 15,000, 20,000, and now as we speak, we are sitting on Mount 25,000. Between 10,000 and 25,000, we've had GST, we've had demonetization, we've had a couple of elections, we've had a couple of wars, we've had the major pandemic as well, but the cult of the equity market and the market kept moving on. So what it teaches you basically is that over the long term, irrespective of the events that are taking place in the near term, the Nifty has compounded at 12% since inception. What does this mean? It's doubled every 6 years. And what does this coincide with? For the last 23 years, the Nifty EPS itself has compounded at 12%. So whatever happens, if the earnings are moving in a certain direction, the market eventually will catch up. So at 25,000, the index trades at 22 times FY25 price to earnings. This is something that we will monitor going forward as well, irrespective of, again, the events. The last 5,000 points is what we're tracking right now in terms of moves. They've been led by, the PSE index, the public sector enterprises, the realty stocks, oil and gas, as well as some of the auto stocks as well. What hasn't participated as much in the last 5,000 points has been the IT index, the FMCG index, and the Nifty Bank, while they've moved, but not to the extent of the others itself. It's been a broad market rally. So SME IPO index is up 165 points, small cap and mid cap indexes up anywhere between 40 to 50% itself. The top Nifty gainers, Bajaj Auto, Coal India, M&M, ONGC, basically IT, realty as well, you have PSE's realty and the others. And if you look at the underperformers there, Bajaj Finance is actually down 8%. Asian Paints, IndusInd Bank, HDFC Bank, the biggest of the banks, down by about 1% over the last 1 year or so. But I've said it's a broader market-led rally. So we have Oil India, NBCC, Trent, all of them nearly trebling in the last 1 year or so. Oracle, Amara Raja up 150% as well. And here too, we've had a couple of notable losers. Z down 50%. We've had Naveen Fluorine down 20%. PVR Inox down about 15% as well. With all things said and done, as we sit atop Mount 25,000, what are the things that we are tracking going forward? One, will FIIs return to buy in cash market? This has been a largely DII-led rally. Second, now with the outperformance of the mid-cap stocks, is it time for large caps to take the baton and move forward? The third thing that we're watching out for is increasing retail participation in domestic SIPs. Does that continue in wake of all the regulations that are coming by as well? And finally, there are a lot of pockets of hefty valuations in the broader markets. Do they go away or not as well? And we obviously cannot discount the impact of geopolitics and global developments more on the market. So those are a bunch of things that we'll be watching out for from Mount 25,000.